losers today, and that's Coal India. There is a JPMorgan note. Nigel joins in with details. Nigel, what's concerning JPMorgan?
Well, JPMorgan, they have a neutral rating and they've cut their target price to 395 rupees per share. They have highlighted three big points. Point number one, they are saying that international pricing, coal prices have been soft because of oversupply, which in turn would put some kind of pressure on the e-auction prices. So that's point number one. Point number two is they are highlighting from August 2024 till date, we have power demand that's been rather weak. And that's led to volumes being relatively lower for Coal India, and also inventory has moved up. That's point number two. Point number three is they are talking about some of these companies that were earlier customers, but they have been backward integrating and they have been getting some part of their coal through captive supplies, which has led to some kind of market share loss for Coal India as well. So all these 3 points are causing them to be a little bit cautious. However, they say there's a possibility that they could turn positive. And they've highlighted two aspects here. One is, if the stock price corrects to around 340 rupees. And the second factor is that if India's power demand sees a sharp improvement in the coming months as well. So that JPMorgan sounding a little bit cautious because of the top 3 points, but they're saying they could turn their stance based on whether the pricing comes down, that's the stock corrects to around 340 rupees. And the second factor is if power demand improves materially. Back to you.
Thank you so much, Nigel, for joining us and giving us a sense of what JPMorgan had to say as far as Coal India is concerned. But moving on,